Evaluating a stock for long-term investment involves several key steps and factors. Here's a guide to help you make informed decisions. Welcome to our UR.AbrarArtist channel today. 1. Fundamental analysis. Revenue and earnings growth. Look for companies with consistent revenue and earnings growth over the years. This indicates a stable and growing business. Profit margins. Higher profit margins suggest a company is efficient in managing its costs and generating profits. Debt levels. Check the company's debt-to-equity ratio. Lower debt levels are generally preferable as they indicate less financial risk. Return on equity. ROE. This measures how effectively a company uses shareholders' equity to generate profits. A higher ROE is usually a good sign. 2. Valuation metrics. Price to earnings, P/E ratio. Compare the P/E ratio with industry peers to determine if the stock is overvalued or undervalued. Price to book, P/B ratio. This compares the market value of a company to its book value. A lower P/B ratio might indicate a good investment opportunity. Dividend yield. For income-focused investors, a consistent and growing dividend yield is a positive indicator. 3. Economic and industry analysis. Economic indicators. Consider broader economic factors such as interest rates, inflation, and GDP growth, which can impact the stock market. Industry trends. Analyze the industry in which the company operates. Look for industries with strong growth potential and favorable trends. 4. Company-specific factors. Management team. Evaluate the experience and track record of the company's leadership. Strong management can drive a company's success. Competitive advantage. Identify if the company has a sustainable competitive advantage, such as a strong brand, patents, or unique technology. Innovation and R&D. Companies that invest in research and development, R&D, are often better positioned for long-term growth. 5. Technical analysis. Stock price trends. Analyze historical stock price movements to identify trends and potential entry points. Volume trends. Look at trading volumes to gauge investor interest and market sentiment. 6. Risk assessment. Market risk. Understand the overall market risk and how the stock might be affected by market fluctuations. Company-specific risk. Consider risks specific to the company, such as regulatory changes, competition, and operational risks. 7. Long-term goals and patience. Investment horizon. Align your stock choices with your long-term investment goals and time horizon. Patience and discipline. Long-term investing requires patience and the discipline to stick with your investment strategy through market ups and downs. By combining these factors, you can make more informed decisions and select stocks that are well-suited for long-term investment. Would you like to dive deeper into any specific aspect of stock evaluation? Thank you for joining us on this. If you enjoyed this video, make sure to like, comment, and subscribe for more content like this. Let us know in the comments what other legends you'd like us to cover. Until next time, keep striving for greatness.